Something big just happened and Bitcoin has dropped, oil has exploded, and the headlines are screaming about geopolitical chaos all over again. We've got talk about blockades, rising tensions in the Middle East, and suddenly the entire market is on edge once again. But here's the thing. Bitcoin didn't crash, it held. And what that tells us right now might be one of the biggest clues we've had in weeks about where this market is heading next. During this video, I'm going to be breaking down what actually caused this move, also why Bitcoin holding 70,000 US dollars is incredibly important, and what smart money is likely doing right now, and most importantly, what I think is likely to happen next. Because I genuinely believe this could be a setup for a move that catches a lot of people off guard. So let's get into it.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematthew.com. This content is for educational and entertainment only, and I'm not a financial advisor.
So here's the situation. Over the weekend, tensions escalated after Donald Trump announced a blockade of the Straits following a failed peace talks. Now, if you don't know why that matters, this is one of the most important oil shipping routes in the world. Roughly 20% of global oil supply passes through that area. So naturally, the market reacted fast and oil prices, they surged. Brent crude oil up over 8% and WTI up over 9%. And when oil spikes like that, it sends shockwaves through the global markets because higher oil equals higher costs and higher costs equals inflation pressure. And inflation pressure equals uncertainty. And when uncertainty hits, markets tend to de-risk. And that means stocks pull back, crypto pulls back, and risk appetite drops. And that's exactly what we saw. Bitcoin dropped slightly. The overall crypto market dipped below 2.5 trillion. And here's where things start to get a little bit more interesting. Because despite all of that, Bitcoin held around 70,000 US dollars. Let me say that again. With global tensions rising, oil exploding, and markets reacting, Bitcoin held 70,000 US dollars. That is not weakness in my mind. That is strength. Because in a truly bearish environment, that level would have been lost instantly. Instead, what we saw was a move from around 74,000 US dollars down to around the 70K region, and then stability. Now, this is where most retail traders are going to get it wrong because they see those red candles and they think, here we go, it's crashing. But smart money, they're looking at the structure, and structure right now is saying this: we're still holding a major support level. Now, let's talk about what's really happened here, because this is where the truth is. Over the last 24 hours, 184 million US dollars got liquidated. Over 100 million of that were long positions. That means traders who were betting on prices going up got wiped out. And this is key because markets don't just move randomly. They move where the liquidity is, and liquidity was sitting just under the price. So what did the markets do? It went down and it took that liquidity to a reset. This is what we call a liquidity sweep, and it happens all the time. This is not something new or something special. The markets always try to shake out weak hands. It clears over leveraged positions and then decides what to do next. So the question becomes this: was this the start of a bigger drop, or was this just a reset before the next move up? This is where it gets interesting for me again. I know I keep saying that because this whole topic is super fascinating to me, because while retail is panicking, some analysts are saying the complete opposite. Michael Van Pope, the well-known figure in the space, pointed that out. 3 key on-chain indicators that are record lows. And what do those indicators suggest? That Bitcoin is potentially undervalued. Now let that sink in. Well, the market is reacting to fear. The underlying data is saying something different. It's saying this might actually be a buying zone. Now, I'm not saying go blindly and go and ape into Bitcoin now, right now, and put all your money in. That's not what I'm saying. But this is exactly how smart money thinks. They don't buy when everything feels safe. They buy when fear is high, sentiment is shaky, and people are unsure, because that's where opportunity lives. Now, if you've been watching me for a while, or you're a member of the Wolfpack, you'll know that I'm on a daily accumulation at the moment of Bitcoin. And I have been since the beginning of October, or maybe the end of September. Either way, around that time, every single day, I'm buying Bitcoin. I don't care what the price is. Because for me, this is a buying zone because we're in extreme fear and have been for a very long time. Now let's talk about sentiment, because this is one of my favorite things to look at, because Bitcoin sentiment went from bullish to neutral really quickly, and Ethereum sentiment went from neutral to bullish. Now, why does that matter? Because sentiment drives behavior, and behavior drives price. When Bitcoin sentiment drops, it means confidence is shaking. And when confidence shakes, retail hesitates. They stop buying, they start second guessing, and they look for confirmation. Meanwhile, smart money steps in quietly. And here's the other interesting part. Ethereum gaining bullish sentiment while Bitcoin cools off. That is the early signs of rotation. Now, I'm not saying that's definitely started to happen, but it is a sign to keep an eye on. Next thing we need to talk about is the short squeeze setup, because this one is important and catches a lot of people out, because Bitcoin could bounce from 70k to trap the late shorts. And this is massive because think about what just happened. The market dropped, fear increased, longs got liquidated, and sentiment cooled. So what do most retail traders do next? They start shorting the market. They think, the market is turning bearish. But if the market turns around and pushes back up, those shorts get squeezed. And when shorts get squeezed, price moves fast because those positions are forced to close. That creates buying pressure, which pushes prices higher, which creates more liquidations. And suddenly you've got a strong move out of absolutely nowhere. Now, I'm not saying that's definitely going to happen. I'm just talking about the situations you need to keep an eye on. For me, I'm doing daily purchases of Bitcoin. It's not an issue for me. It doesn't matter. Until we're out of this zone, I'm doing it every single day so I can average out my price over a period of time. But we need to break down what these scenarios are going to look like. The bullish scenario is that Bitcoin holds that 70,000 US dollars. It reclaims maybe the 72, 74K, and the shorts get squeezed and then momentum builds from there. This is the full trap scenario because if there's a bearish scenario kicks in, Bitcoin loses that 70K cleanly and it breaks structure. It drops down towards maybe 67, 65 grand. This is where things change. So right now, we're at that decision point. Now, personally, this does not look like a breakdown to me. Not yet, anyway. This looks like a news-driven move, a liquidity sweep, and a sentiment reset. And most importantly, a level that's being defended. And in markets, levels that hold under pressure are powerful because they show where buyers are stepping in. Now, we need to zoom out a little bit because Bitcoin is still above the key structure and it's holding major levels and it's reacting strongly to dips. And even with global tension, oil spikes and market fear, it hasn't yet broken down. And that does tell you something. And what it tells me is the market is still strong. So here's the bottom line. The headlines will try to scare you. The news will make it sound like everything is falling apart. But when you look at the data, when you look at the structure, when you look at behavior, this looks more like a setup than a collapse to me right now. Now, I could be wrong, and we always need to manage our risk. But right now, this is a moment to pay attention to, because if Bitcoin holds this level, the next move could come fast. And if it catches people on the wrong side, it could be explosive. And if you got value from this, make sure you hit that like button, hit the subscribe button, and drop me a comment down below because I read every single one of them. And if you want to learn the exact strategies that I use to navigate markets exactly like this in the past and make money, then please make sure you check out my completely free crypto liftoff course. There's a link in the description, or you can head over to cryptowolfpack.co.uk and click on the crypto liftoff free course. And don't forget, I co-host the UK Crypto Podcast with Paula Talks Crypto. There's a new episode out every Friday at 7 p.m. I'll link the playlist at the end of this video so you can dive straight in. So stay sharp, stay ahead, and I'll see you on the next one. And remember this, the strength of the wolf is in the pack.